Welcome to Study Loop.
So in this video, we are going to discuss four poverty and inequality programs that have been implemented over the years. The programs that we are going to discuss are TANF, EITC, and SNAP and Medicaid. So starting off with TANF, which actually stands for Temporary Assistance for Needy Families. This is where the federal government provides aid and the state distributes that aid to their own anti-poverty programs. There's a lot of factors that may contribute to how much assistance is provided, and that is all dependent on how the state set up their programs and the number of poor people in that state. EITC, which is Earned Income Tax Credit, actually aims to assist the poor via the tax system, right? So the poor and the near poor receive quote unquote a discount on the amount of taxes that they have to pay, and that assistance actually increases as your income increases up to a certain level. SNAP, which is the Supplemental Nutritional Assistance Program, is where the government provides federally funded debit cards. They're issued to both the poor and the near poor, and the amount of income that are issued on these cards is dependent on several different factors. First and foremost, the government believes that one should and can afford to spend just about 30% of their income on food. And so for every $100, $30 is considered enough to spend on food in terms of your salary. And so the amount is based somewhat on that. So it's about 30% of your income. However, it can still vary based on your total amount of income and the number of children that you may have. And last but not least, we have Medicaid. Medicaid are federally funded programs that are actually run and administered by the state. The government provides money to the state, and the state implements the programs in their own unique way. Through Medicaid, you have varying eligibility in terms of the different requirements and the different policies that you must adhere to. However, on the bright side, Medicaid does guarantee basic coverage.